Alright, ladies and gentlemen, welcome back to my channel. I got this article here pulled up by CNBC, and I'm just going to read through it for y'all, and we can kind of discuss it. And I'm going to give y'all my opinion on it, and y'all can look into this story further. I personally find it kind of interesting, so with that being said, y'all, let's get into it. Now, this article here is written by from CNBC by Hugh Sun. Okay, so that's who wrote the article. But anyhow, he says right here, Wells Fargo, so that's the bank we're going to be talking about. Wells Fargo tells customers it's shuttering all personal lines of credit. Okay, so first of all, let me lay down some foundation for you here. Okay, a personal line of credit. What that is say you got a checking account at Wells Fargo. Well, you can also go into Wells Fargo and you can say, Wells, I want you to give me a line of credit, a personal line of credit on that checking account. Now, what that's going to do is that line of credit is attached to your checking account, and you can be like, okay, well, I need to borrow. Let's say it's $1,000 line of credit they give you. So you got $1,000. If you want to, you can borrow $500 and go spend it on whatever, and come in 3 months later and pay it back in full, or you can pay it back over time. It's just a line of credit acts a lot like a credit card, but you're not limited to the things you can use the money for. You can use a line of credit for a lot of things that you can't very easily use a credit card for. So it's just all it really is it's just a very flexible, it's a flexible loan that you can pay off, reuse, pay off, reuse, pay off, reuse. You can use it more than one time, and they can set them up in all kinds of different ways with all kinds of different interest rates, terms. Some of them may have an annual fee if you don't use them, but they're just kind of they're just kind of sitting there on the side, and if you need it, you got access to the money, if that makes sense. So, but with that kind of giving y'all just a generic overview of it, let's get into this article here because I think y'all will find this interesting. Okay, they say right here, Wells Fargo is ending a popular consumer lending product, angering some of its customers. The bank is shutting down all existing personal lines of credit in the coming weeks and has stopped offering the product, according to customers' letters reviewed by CNBC. So Wells Fargo ain't just going to shut down some of them. They're going to shut down every single personal line of credit that they gave to their customers. They're shutting them all down. They are not doing personal lines of credit anymore. They say right here kind of what they build their lines of credit for. The revolving credit lines, which typically let their users borrow $3,000 all the way up to $100,000, were pitched as a way to consolidate high interest credit card debt and pay for renovations or to avoid overdraft fees and checking accounts. That's what they build them for use in, but there's much more practical uses for lines of credit, especially if you're running a business or you're in real estate. Especially if you're in real estate, unsecured lines of credit, like these personal lines of credit, can make a lot of sense if you've got access to some of them with decent sized credit lines of like $25,000 or $50,000. They can really begin to make a lot of sense. But that's what they build them for, but they have much more practical and financially wise uses than that. But let's continue on. Wells Fargo recently reviewed its product offerings and decided to discontinue offering new personal and portfolio lines of credit accounts and close all existing accounts. Okay. Now, there's the personal lines of credit. We already went over that. That's just, oh, they think you're trustworthy. Well, here's a line of credit for this much. And you have to apply for it, of course. And then they said right here, and portfolio lines of credit. Now, what a portfolio line of credit is referring to is it's a line of credit, but a portfolio line of credit is secured by an asset. Specifically, in this case, stock market assets. Like if you have a couple thousand shares of AT&T stock, well, then you can get a portfolio line of credit through Wells Fargo, and whatever the value of that stock is, that's what the access of available money to borrow through your portfolio line of credit is going to be. So it's a secured line of credit because it's secured by financial assets that you own. And a lot of times with secured lines of credit, the interest rates tend to be a little bit cheaper than unsecured lines of credit. So there's just kind of some basic information on that. But let's continue with the article. Okay, and they say right here, the move would let the bank focus on credit cards and personal loans, it said. Okay, well that's interesting. They're swapping from credit lines to personal loans. Interesting. Wells Fargo CEO has been forced to make difficult decisions during the I cannot talk about that, so because YouTube doesn't really like that. Offloading assets and deposits and stepping back from some products because of limitations imposed. Now, here's the interesting part. We're getting into this. From some products because of limitations imposed by the Federal Reserve. In 2018, the Fed barred Wells Fargo specifically from growing its balance sheet until it fixes compliance shortcomings revealed by the bank's fake account scandal. So this was a couple years back. Wells Fargo was getting greedy, to say the least. And they decided, well, a bunch of their employees were like, you know what? I want my bonus. So how am I going to get my bonus? Well, my bonus is specifically tied to how many of my clients can I get to open more and more accounts. So they were just like, well, since my clients don't want no new accounts, I'll just go behind their back and open up new accounts with their information anyways. So there were a bunch of employees. Now I'm just giving you the overview here. But there were a bunch of employees that done this, well, fraud is what it was. And that was a whole big fiasco. They got fined a lot of money. I think it was I may be wrong, but it might have been a little over $1 billion fine or something. I'm probably wrong there. But they did get fined a lot of money. And rightfully so. I mean, what are you doing? Defrauding your customers and you're defrauding the customers and the bank itself and the Federal Reserve. You're defrauding everybody. So yeah, you needed to find out the crap, and a bunch of those people lost their jobs. Which, when you're committing financial fraud, yeah, you should lose your job. But anyhow, what are you thinking? But they say here, the asset cap has ultimately cost the bank billions of dollars in lost earnings based on the balance sheet growth of rivals like JP Morgan Chase and Bank of America over the past 3 years. Some fancy people that claim to know what they're talking about have said. It has also affected Wells Fargo's customers. Last year, the lender told its staff it was halting. So this was last year. They said they were halting all new home equity lines of credit, otherwise known as the HELOC. Now, let me explain to you kind of what the HELOC is. The HELOC, same principle as a personal or a securities-based line of credit. Same deal. However, it is specifically tied to the home you own, and it's basically when you get it set up, it's almost like a second mortgage on your home, if that makes sense. So the home equity line of credit is specifically tied, it is securitized or collateralized by the house that you are paying a mortgage on. And the amount that you can borrow is specifically tied to the assessed value by an appraiser at the time that the bank appraised it, and then they said what the value was, and then they give you a certain amount, and then that certain amount is your equity that you have in the property. Well, if you have a decent amount of equity, then they say, okay, we'll let you borrow some of that equity through a HELOC. So that's kind of a very simplified version of what a HELOC is. So now that I've gave you that, so they stopped doing any more new HELOCs. They just cut them all out. We're not doing any more. I don't think they shut down the ones that they already have. They're just not doing any new ones. Okay, months later, the bank also withdrew from a segment of the auto lending business, which let me tell you about that one. The auto lending business, one might say it's a little overinflated right now. So that was probably, to be fair, on Wells Fargo end, that was probably a safe move because that industry, it's a little bit frothy in my personal opinion. So probably a good idea for them. Then they say right here in the CNBC article, with its latest move, Wells Fargo warned customers that the account closures may have an impact on your credit score. Well, newsflash, not may have, it will have an effect. Because what happens, your credit score is composed of open accounts and the length of accounts opened. So let's say that the people that have these credit lines, these personal credit lines, open with Wells Fargo, when Wells Fargo closes them, it's basically going to look on the credit report like all that age of that credit line, if it's any kind of old, let's say it's 5 years old, well, that not, it kind of drops off the credit report. Now, it'll still stay on the credit report, but it will show up as account closed, so it won't count for age of opened accounts, which is a metric that some credit scoring systems use. Some credit scoring systems use age of total accounts, but some credit scoring systems use age of open accounts. See the difference? So yeah, that's definitely going to affect some of these people's credit scores, and some people it will affect them by quite a bit. Now, some people that have what they call a thick file versus a thin file, the thick file, it won't bother them nearly as bad. But for a thin file, it may cause a major drop. So yeah, that is something that could be a pretty good issue for some people. And then they get talking right here. Another part of the FAQ asserted that the account closures couldn't be reviewed or reversed. Well, of course they can't be reviewed or reversed. They're getting rid of them altogether. They're like, we don't want to do them no more. So yeah, the account, yeah, of course you're not going to be able to get these reversed. Okay. Politician talking about this. Don't want to hear about politicians talking about it because cuckoo. Okay. Then let's get right here. Simplifying offerings. The bank gave this statement: in an effort to simplify our product offerings, we've made the decision to no longer offer personal credit lines as we feel we can better meet the borrowing needs of our customers through credit card and personal loan products. Okay, so what they're saying here is they're saying we're shifting what we're putting our resources into because we think we may get more, we may be able to make more money and quote unquote serve our customers better, which coming from a bank it's like, yeah, okay, but anyhow, that's what they're saying. Okay. Customers have been given a 60-day notice that their accounts will be shuttered and the remaining balances will require minimum payments at a fixed rate according to the statement. Okay, so if the customers don't have a balance on these lines of credit, the Wells Fargo bank is saying we're just going to shut it down and problem solved. If they do have a balance on it, they're giving them a 60-day notice saying, hey, within these 60 days, it would be nice if y'all would come in and pay these lines of credits off. If you can't, what they're basically going to do, from what I understand, is they're basically going to take the remaining balance and convert the remaining amount into a loan instead of a line of credit. So you're not going to be able to borrow anymore, and the amount that you owe is just going to turn into a loan at a fixed interest rate, and you're going to have to make payments till you pay it off, according to my understanding of this article. Then they say right here, can't talk about that because YouTube don't like that. Okay. Making the switch. Wells Fargo doesn't disclose how many customers used the credit lines it is eliminating. It had $24.9 billion in loans in a category called Other Consumer as of March, which was 26% lower than the year earlier period. Okay. One of the customers said that the change is prompting him to switch banks. Okay, so some customers are getting mad. And some of them got reason, because Wells Fargo is not exactly what I would call been honest with their customers the last couple of years. So, but anyhow, that's the reading of the article. Now, let's kind of go over what I think a little bit. So what I think is mostly going on here is Wells Fargo, one, they got hit with all the regulations and fines and everything else for doing all their crooked crap, and they're still recovering from that. So that's issue one. Issue two was the economic problems from, can't talk about that, earlier last year. So that issue caused some problems. Number three is the loan markets are getting kind of frothy. They're maybe topping out. So Wells Fargo is probably like, well, why don't we reduce our risk a little bit? Let's shut down so many of these unsecured lines of credit and not issue anymore, and we'll just focus on personal lines and stuff, personal loans and credit cards. So there's that. Number four is if they shift to the personal credit cards, there's a bigger chance for Wells Fargo to make a lot more money, because if you carry a balance on a credit card, depending on the credit card, you can get took for a lot of money if you don't pay that sucker off. So there's a lot more. There may be, according to Wells Fargo, they may be looking at it like there's a lot more upside for them in just trying to get into the credit card game more and getting out of the personal lines of credit and the HELOC side of things so much. So I think what it amounts to is they're trying to reevaluate where they think they can make more of their money, and two, they're still recovering from all their fiascos. So that's kind of what I think. But with that being said, y'all, tell me what y'all think in the comment section. And with that being said, I will see y'all in the next video. Y'all have a good one, and I'll talk to y'all later.